Well, hello, Maverick traders. Joe with you here on a Tuesday. It's the 20th of February. Hopefully you guys had a nice President's Day weekend and enjoyed the Monday off. Let's jump right into the markets. I've got my 2 cents. Take responsibility for the outcome. You guys know the drill. I'm going to break down the news of the day. Not a lot out there. More of stuff that just carried over from last week. We'll break down the markets technically, see if we can't take advantage of them, and as always, share trades with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into the market analysis, you'll see that we had a pretty sideways day. How do we finish? Well, the Dow, the S&P, and the NASDAQ were down. Not a lot. We did roll over from kind of a, I'll call it a double top on the SPY and the diamonds, but on the Qs, it's a little bit weaker than that, but it's nothing to panic about. Dow down 0.17, S&P down just over 0.5%, the Q is just shy of 1%, Russell 1.38%. If you take a look at the volatility of what these guys usually carry with them, it's about average. Oil down about 1%, and gold had a small bounce over 0.5% today. Moving over to the daily news, resistance levels hold coming out of the holiday weekend, and that's about all I'm going to say about it. Coming out of the holiday weekend. So this isn't a panic sell. This is just, okay, do I want to be a little bit more neutral here, maybe take some profits, which we've seen for about a week, ever since that CPI number came in showing that inflation might be too hot to really justify cutting interest rates. Investors are seeing strong economic numbers and inflation still showing expansion. And I think that might be enough for some of the optimism to leave the market thinking that, oh gosh, we're going to get a rate cut. You see hike, and the market seemed to do pretty well with it. So you'd expect to cut or stay sideways and then eventually start cutting. I think these markets price that in and they're realizing they might not get that. Taking a look at the advanced decline line, you can see 63% decliners, 34% advancers. We did gap down, like I say, once again, coming out of the holiday weekend. Anybody that was debating about taking profit going into Friday, here we are on Tuesday, and they decided, you know what, better safe than sorry. But we really didn't fall apart based on where we finished. I'll show you the chart here in a second. Above below the 50-day moving average, 58% above, 42% below. Not much has really changed substantially sector-wise and technical-wise for any chart, really, even when comparing the overall markets. So let's just jump directly into our first chart. And what I'm talking about is basically the pattern that we've been left with. Being able to drop a box in this situation puts things kind of in perspective because it gives you a range of kind of where we're at. And one thing that I really want to focus on is how we finished as we close the days. That is a nice little hammer candle. Here's another little hammer candle. Maybe not so much today as it was the first gap down that we saw after that CPI number, but nonetheless, there is buying coming in off of the bottoms. We are still comfortably above that 20-day moving average, at least in the S&P. I know that the Qs are a little bit different, but the diamonds reflect this as well. So there is stability and a little bit of strength. So I'm not really running for the exit, and I don't think there's a lot of people that will be. Here is something that might be a little discerning. Oh gosh, that is the dreaded double top, right? Well, it's only dreaded if it starts to fall apart. So what I see here is that we have set, and let's see if I can draw this line as close as I can, a higher low. That's if we do pivot today. Now tomorrow is a complete different story, right? We could go a little bit lower. We could actually maybe even retrace back down to this level here, but it's still a bullish trend overall. You can see it is trending higher. It's channeling higher. There's nothing bearish in this at all. So overall, folks, I do believe that we still have a pretty strong channel. This being the focus of what I see right now. Sure, it's not over yet, right? We just started. We just came out of a holiday weekend. But I did see a gap down. I did see the people that wanted to sell going into Friday wake up after the holiday and have sold. The funny thing is we haven't really broken anything. This is going to be our major support level here. And as far as the SPY, we're nowhere near it. We barely threatened the 20-day moving average, so I really can't change things off of the bullish kind of the bullish approach that we had. Let's move on over to the Qs. Now the Qs is a little bit of a different story. It's not super scary, but it does justify that we are kind of at this level of consolidation. It is below the 20-day moving average. It's showing a little bit more weakness. You can see the SPY actually, or the S&P actually bounced off of this green candlestick with a little bit higher of a previous of a move lower today than what we're seeing in the Qs. That's totally fine. This is a lot more volatile of a sector. This also has a whole lot more flexibility when it comes to profit taking. This was the leader. This was the sector that was leading into the end of last year and the beginning of this year. You can see my little box here that we're still playing in that area, and we do have the tendency to actually continue to keep this trend. Sure, it's a little bit lower. It might be below the 20-day moving average where the other one wasn't. It doesn't mean that it's underperforming. It just means that it might be taking a little bit more of a haircut than the other three majors. So overall, folks, there's really not much to get out of this as we move over to the heat map than just more profit taking, a little bit more of a consolidation. You can see that we did have that advanced decline line. We showed you there were a lot more declining than advancing, which is totally normal for a pullback. We do have some winners in here. You've got Walmart in there showing pretty good. Coca-Cola, consumer defensive seemed to hang in there really well. One sector that I've seen emerge in a couple of trades that I have for this roundup is in the financial sector. I'm seeing a lot of resilience and strength in the financial sector specific to banks. So, hey, strength's where you find it. It doesn't mean everything else is inherently weaker. Nvidia's pulled back a little bit, 4.35%. You want to talk about a stock that's quote-unquote due for a haircut. Now, this does have earnings coming up tomorrow after close, and I don't know how they're going to spin anything that's going to keep traders from taking profits, as this is the biggest gaining stock out of 2023. There is plenty of meat to take off that bone. Doesn't mean it's a bad company, just means that it's probably due for a little bit of a haircut. All right, so let's get going. This moves me into my outlook, and it hasn't changed. Now, folks, I really thought about, hey, it'd be kind of fun because I've been so boring over the last, 2 or 3 months. This is what I'm focusing on. I've got that little box. Let's draw it again. And you can see that, we actually hit a double top. This is the area that I'm referring to. Could I justify going from a +3 to a +2 here? Sure, I sure could, and that's going to be 100% impulsive. My opinion, my feeling. And what do we know about feelings? They don't belong in a top-down approach or a breakdown. So I cannot move this. I see the shadow off of the close today. I see a higher low here than previous after that gap down. It's above the 20-day moving average. Everything is sloping correctly. I have to keep it at a +3. Sure. Can some of you guys justify a +2 thinking that we might be moving into consolidation? Of course. And I tend to agree with you. But when it comes to my top-down approach and what I'm going to lean towards, that cannot change. So I'm going to stick with what has been working and be happy about it. So what kind of trades do we have to look at? There's been a few. We got ABBOTT, GM, JPM, WFC. I want you guys to notice kind of what's out there. The healthcare sector has been quietly getting stronger and stronger. The financial sector has been very strong as of late. So what's been strong has stayed strong. We're seeing some haircuts, and I like to call it haircuts because I don't want you guys to think that the tech sector's falling apart. It's just experiencing some profit taking. It's still a strong sector, and I believe it still will be. So with Abbott, I like it. It's a very strong move. This one actually had a little bit of a pop up today. You can see across the board we've got a couple of extra ones up there. Wells Fargo is one I believe Corey talked about last week or a couple of days ago. It looks really good. I did see some fun things to take a look at when it comes to sideways trades. Take a look at this. Meta, we got Citigroup, we got Goldman Sachs, financials, technology, some of the ones that aren't really getting hurt but aren't really going any higher. So these are stocks that aren't bad and they're doing pretty good, but they're just kind of taking a little bit of a breather as we go into what I like to call a stage of correction or a stage of haircutting, profit taking. A stage of profit taking, nothing more than that. Potential bear side, we got Apple, Alcoa, Mosaic, Schlumberger. We've got a bunch of things that have been weak ever since we got a bunch of things that have been weak for quite a while, and I imagine they're going to kind of stay sideways to weak. So not a lot has changed, even though the markets feel, I hate that word, but quote unquote feel that something's awry. Overall, it really hasn't changed. So let's jump into our first trade. This is on Abbott, and what I did like about it is pretty obvious. We are trend traders. We are pattern followers. And if you take a look at this, we've got this beautiful little high base breakout for you guys out there that want to go a little bit deeper in a type of trade like this. This could be warranted as a small flag pattern. You can see that we kind of went a little bit lower here and here, little flag pattern, and this would be the absolute breakout that goes above the resistance level here with a very nice move to the upside when it comes to overall volume. So Abbott Laboratories, it's in a really good sector, that healthcare sector that's been kind of emerging. It's quietly beginning stronger and stronger, and I shouldn't say quiet, folks. Take a look at what this thing's been doing since the end of last year. There's been a lot of money put back to work in this sector overall. So I do like it. I like it as a breakout, continuation, maybe some sort of a credit spread above an area. You don't have to go too aggressive in direction. You could play something sideways to up from here at this level. Moving on to the sideways. I didn't have a lot of sideways here, but I'm starting to see more and more pop up as they go through earnings and they do well. They're strong sectors, strong stocks, but they just don't seem like they want to gain any traction or go anywhere. This is a really good example. This is Citi. This is in a very strong financial sector as of late. But it's got this really cool movement going on. And I'm going to leave this box out here because we had this pretty good gap up towards the end of January. It pulled back, got a little deeper than we wanted to see it, maybe up below its 20 there, but then has been climbing ever since. Now, if you want to focus a little bit as of late here, you can get a little bit tighter of a range. I don't really want to go too past that or get too specific with handicapping, or I should say hamstringing this to not allow it to work for you, because this could easily get back up to 58 and it could easily get back down to that, this 52.5 mark. But somewhere tight between that 54, 56 sideways to slightly up, if you want to make an error, makes sense. And why that is because I'm seeing over these last 3 trading days that this had some pretty good moves to the upside when it comes to the bull candles versus a little bit of a hesitation in between. And I do believe it has to do with the fact that it is in a pretty strong sector right now. So I do like Citigroup sideways to up. Now on the bear side, it's just where we found it. This is WEC. This is energy. We've seen energy being weak. And guess what? Here's another weak energy stock. Nice decrease here. This is pretty steep. The 20-day completely fell off pretty much after this very large volume move towards the end of January. I do like the slope of this. And take a look at today's action. This is kind of fun. Now, it doesn't mean that it's going to turn immediately, but this is kind of where I like to lean when it comes to chart patterns. And this is a nice bear rally with a beautiful shooting star. I would like to see a little bit more volume associated with this, but based on what I saw, whenever this thing touches or returns to its 20-day, I imagine we could get a rollover. Now, I'm not going to think that it's going to fall down to here 75 or maybe even slowly revisit the 76.5, but let's allow this thing to go sideways to down. So those are the choices I have. Hopefully they work out, and we'll see where they go. So overall, folks, double top confirmed in all 3 of the majors. Now, a double top shows retracement, retesting, and refailure. It's not bearish. Still not bearish, folks. That's what I have, that bullet point there. This isn't bearish. This is a double top saying that there are people willing to cut some profit out of these markets that have a lot to give. Fed minutes out tomorrow. Unfortunately, I think we hang on that. I don't think the Fed minutes mean a hill of beans. But for some reason, I think there might be a little bit more interpretation or unnecessary interpretation of what the Fed says here. We also have jobless claims, existing home sales, flash PMI, services, manufacturing, some Fed speak, bunch of Fed people, blah, blah, blah. NVIDIA tomorrow, after market close, that is going to be a gigantic announcement for one reason. It's made into a gigantic announcement. It is a big stock that a lot of people hold. It's been the darling, the winner, the strongest, the biggest, the AI leader. It's, how else do I say it, folks? It is the Taylor Swift of the Super Bowl. You're welcome. Anyways, stay away from it. Who cares? You're going to see a reaction up, down, or sideways. That's fine. Check potential trades as always. If you guys want to play them, great. If not, it doesn't make a difference. As long as you're position sized in anticipation for earnings, it doesn't really matter if you want to play them or not. Okay, guys, that is what I got for Tuesday. It's hard to do these coming out of a holiday, but let's see what happens the rest of the week. Thanks for joining me, and we'll talk to you next time. Bye, everybody.